Good evening, ladies and gentlemen.
Hello, hello. Didn't see you there. This is Elihu.
Oh! Caught by surprise. Today we're talking about gas prices soaring in the time.
What's your name,
summer.
lad? What's your name? You didn't say your name.
They know my name.
Esteban. Gas prices are soaring.
In the time for summer. Verano. As they say in Spanish.
US is struggling to mine the rare earths of our planet.
It's a very good English accent there. And central banks are tested by housing price booms.
We also have tech stocks diverging as the pandemic comes to an end.
Has the pandemic, sincerely, frankly,
That's what I read on BuzzFeed, but I don't really know
Tune in.
because BuzzFeed is not the most reliable source, as I've been told. But let's just dive into it. Let's talk
Yes.
about it. Let's ramble about it.
Yes.
Yes.
Allow me one moment to explain to you the nature of our energy system.
What was that? Wait, what?
63% of the Earth's population uses hydropower. And for those of you who don't know what hydropower is, have any of you heard of the Hoover Dam? Well, ladies and gentlemen, the Hoover Dam allows us to spin turbines that create electricity. However, in places like Phoenix, Arizona, Los Angeles, places in the Southwest, there's been a drought. And unfortunately, these dams and hydroelectric power sources have not been sufficient to power the air conditioners of these stay-at-home remote workers.
Damn.
Consider this. This cost used to be transferred to the employer of a company. They would power the air conditioner while their employees would not be at home and in the office and keeping them cool.
Did you know that the total global air conditioning energy consumption is more than that of Bitcoin mining?
Well, someone should tell Elon.
Elon is misinformed.
Someone should tell Elon to accept Bitcoin again for his Teslas.
Did you know that the electricity used to power your Teslas comes from coal burning?
Well, coincidentally, coal has actually shot up in futures prices because we have experienced a huge boom, as the chart shows here, in the futures of natural gas, such as gasoline that we use in our vehicles and to power our electrical plants.
What about when you eat too many beans and you start, is that natural gas?
It is. However, the natural gas that occurs, which is most consequential to the environment, is coming from the anuses of cows. That methane gas is quite toxic to the ozone.
What does their anus have that mine doesn't?
Volume. It has market cap. A cow's farts are by far much more toxic because they are much larger animals and there are many of them, and we consistently industrialize the meat processing industry. And so that is in large part why vegans are vegans and vegetarians are vegetarians.
Shout out to all the vegans and vegetarians for helping the world little by little. You guys are all making a difference. Good job.
Shout out to his family.
That's right.
So gas has been soaring, if you haven't noticed. If you drive a gas car, if you drive a Tesla, you don't look at those putrid stations of disgusting germaphobes. However, for the rest of us mortals, we use gas stations and we've experienced quite a bit of a dent in our wallets. And if for those of you wondering why this has occurred, it's a wide variety of reasons. Last year, many gas stations and storage places were limiting the supply that they had in gas because of the expectation that the coronavirus would continue on. But now, as we've escaped the pandemic quite rapidly, are heading into net zero normalcy, we're experiencing a surge in prices because of demand, but a lack of supply, hence raising the future prices of gas.
Is this the new normal that everybody was boasting about back in 2020?
I hope not, because now there's a bigger demand for coal to power these electrical power plants.
More than lumber?
Because it's cheaper. Lumber has fallen more than 40% in the past couple weeks.
People started realizing it's just wood. It's just wood, and trees are not going to go extinct anytime soon.
That's another discussion. Well, debatable, but that's another discussion
for another day.
Later in our one of our series about housing price booms. But gas prices are going up. You've definitely seen it, and the chart shows it. These are the futures. Oil has hit $72 so that's a lot when it was at its low at 40. And if we see here, these are some of the companies that are winning: Range Resources and Taro Resources. Yes, there is a subtle dip, but overall there is a massive increase in price. Now this is a rarity, because typically you see gas prices soar during the winter because electrical power plants that are not powered by nuclear energy use gasoline to power the electricity, or hydroelectric power. But now you have a drought in the Southwest, and also in the Southwest it's more prominent for tech companies to allow their workers to work remotely, and so it's becoming more expensive for these poor rich tech developers.
Did you wait? Did you just say poor rich?
Yes, an oxymoron indeed.
What does that mean? What are you referring to?
Well, it's saddening to see a little bit of a spike in their expenses.
Are we talking about the $300,000 annual salary of coders in California who still have roommates?
Yes, the $300,000 salary of roommates with high expenses in one of the most expensive cities in the world. Yes,
those are the rich poors.
Yes, the rich poors.
Okay. Just want to make sure.
Nonetheless, another indication of inflation. Is it transitory? I don't know. Is it long term? I think yes. However,
should we invest in oil companies?
No. Buy a Tesla. I bore myself with gas.
It's dirty. It's you go to a gas station, you touch the handle, it's kind of gross. A lot of people have been there, a lot of people have touched it, and a lot of people are not as hygienic as you may be, so it's ultimately disgusting. On the topic of coal, I want to address the US facing a struggle in its rare earth ventures. What are rare earths? Specifically, elements extracted from the ground of needed potential for electronics, lithium, boron, semiconductor chips. They're in your phones, in your nice handy dandy phones, in your laptops. And those require rare earth metals that we need to extract. Currently, the US is trying to race China in extracting and processing these rare earth minerals.
So what are these companies that we see on the charts here?
Well, right here we see the Taiwan, or the TSM, the Taiwan Semiconductor Company, and they are the biggest semiconductors manufacturing company in the world. They produce about 92% of the most sophisticated semiconductor chips in the world. The rest is made by Samsung.
Samsung.
And this is a little bit scary to the U.S., to China, right? You know, the U.S. and China, they have some
frightening.
They have a bit of a feud with Taiwan in determining, you know, who Taiwan belongs to.
But purple is TSMC, which is the Taiwan Semiconductors, as you can see, and it is quite the J curve in 2021.
J for Jordan. Elihu. And this poses a problem. The U.S. wants to make things more in-house, more domestic. You know, they want to kind of rely more on themselves for this whole semiconductor movement because it's the future. You know, as more demand increases, as more quality is needed for our, you know, smart devices, we need more sophisticated chips. And if Taiwan is the main candidate for providing these chips, if demand so happens to exceed, their production might be affected in a negative way. So they are on the hunt for more rare earth minerals with their allies from the ground, and that whole extraction process is going to help them manufacture things more domestically.
Interestingly enough, it has raised their market cap to become the biggest in the semiconductor industry.
TSM?
Yeah, TSMC.
Yeah, it's at around a $550 billion valuation. Market
600
cap.
billion.
600? Yeah, okay, roughly.
Well, yeah. I mean, you're not wrong, sir.
Why is this actually scary? Well, you
Frightening,
see,
yes.
frightening. If they cannot meet demand, then the entire global economy is in shambles. Why is that? Because cars, computers, smartphones all rely on TSM.
Did you wonder why your used car has gone up in value more than 16% in the past month?
You know,
It's because of the semiconductors in there.
really?
Yes. And there's an expected increase in price rise in HP computers. Apple has considerably had the highest prices of all the laptops. So I don't think they're going to be raising them anymore. But Windows, Intel, all those other types of modicum computers, they will be raising prices and passing it to consumers like you and I. And with gas prices rising, the transportation of these goods will also affect prices.
Oh my god, and don't even get me started about inflation.
Well, it does sound a little bit like what happened in the 1970s, which we described in one of our episodes, our earlier episodes.
You know, history does not repeat itself, but it certainly does rhyme.
So protect yourself, be wary, understand that your money's no good here.
No good at all. Unless you're hoarding gas, then, you know, you might sell that on the black market for a nice margin profit.
Well, enough of this doom and gloom. Let us transfer us to another world of the central banks being tested by housing price booms. And what this means is that in the past year, since January of 2020, the US has seen a boom of 15% in the housing market. The United Kingdom has seen a 13% increase in the housing industry. And Germany has seen a 16% rise in the housing industry. Now, I pause here for Norway because Norway has led in the implementation of a higher borrowing cost. Now, what does this mean in relation to the global society? Norway raising the housing cost or the borrowing cost means that it becomes more expensive for people who in Norway to purchase properties with borrowed money. Now, Norway could be considered somewhat an emerging country relative to the United States, the United Kingdom, and Germany. Why is this? The United States, the United Kingdom, and Germany have the most amount of gold in the world, have one of the strongest militaries, and the most advanced legal infrastructure systems that we know. So investors feel safe there. So money is flowing. Now, the Fed, the Federal Reserve, and also other central banks of the world are timely considering raising rates. The United States has said we will raise interest rates on borrowed money in 2023. So we will keep them low for now, as long as inflation is under control.
You got 2 years to take out the most amount of loans that you possibly can at a low interest rate.
Precisely.
2 years.
Now,
Make the best of it.
now, the Fed could come around and say something different and act in another way. But the US, the UK, and Germany typically act in accordance with one another when it comes to central banking policies because they are the strongest currencies. Japan is pretty strong as well, but whatever. So the US, UK, Germany are much more likely to keep interest rates for borrowed money at a low cost because they're able to withstand the high volatility in commodities and the US dollar. So the US dollar is the reserve currency. And what does that mean? If your currency relative to the US dollar is on par, strong, isn't necessarily losing value relative to the US dollar, then you're okay. If you're the US, you're always going to be okay because you make the rules. If you work with the UK and Germany, those are very strong currencies as well. So they're able to keep inflation, or rather interest rates, very low. But the spike in housing prices has made people who own real estate able to spend more because they feel wealthier. So,
Are they though?
yes,
They are. Okay.
on paper.
Just want to make sure.
Unless they take out a, you know, what is this called? Everybody's been taking out a. It's not a reverse mortgage, but it's a.
It's a retrograde mortgage.
No, it's when you refinance. When you refinance your loan. When you
And
basically
finance it again, like refried beans, where you like fried.
No.
I never really understood refried beans because like what you fried them already.
You bought your house at 500,000. Now it's worth 600. So you say, "Hey bank, give me the $100,000 difference, and I'll pay you a little bit of fees." But now you have more money to spend, or you just see that your house is just worth more, and you'll spend more money because you could always sell your house if worse comes to worse. So this is happening in the U.S., the U.K., and Germany. 15% increase in the U.S. housing market is astronomical when you're dealing with houses worth 500,000 and above.
Pretty pricey homes. Pretty expensive.
The
luxury
UK
living.
is one of the most expensive real estate markets in the world.
Wait. So Norway is trying to get a piece of this pie. It's trying
Well,
to
Norway is one
scooch
of the
in?
first central banks to basically say that they're going to increase the cost of borrowing, raising interest rates in a sense. So they're front running the Fed, which some people believe that the Federal Reserve is lying, or as Gen Z says, capping, and not necessarily being frank with us about when they're going to raise interest rates. However, I believe in Jay Powell, the chairman of the Fed, and saying that he will let us know when these interest rates will go up.
And you could always follow the unofficial Twitter account of Jerome Powell. He has some very good information there about interest rates and the overall economy. It's not.
And the U.S. is pretty much the guidance, the leader in determining the worldwide interest rates, because they are the reserve currency, and also they are. I mean, well, the U.S. dollar is accepted everywhere.
We just make the rules.
Yeah. So what Jerome Powell has said and what the central bank has said is that their targets based on raising interest rates are based on inflation and unemployment data. Right now, unemployment data has shown to actually do better. So unemployment has become less prominent. So
People are getting jobs out
they're
there.
getting jobs. It's still not to the point that they want, but it's interesting to see that that is one of their metrics.
Yeah, McDonald's just said that they're planning on hiring over thousands of people. And Amazon is hiring a bunch of people all the time. Granted, their turnover rate is exceptionally high, but there's still jobs out there.
But why is this important? Why are interest rates important? And the reason I'll tell you is that it makes a difference in when you're buying a house. And if housing prices are going up, you need more money every month. You basically need a better job. You need a better job that pays you more money in order to afford a house that costs more.
Or an OnlyFans.
Or an OnlyFans if you're able to do that. And if housing prices have increased 15%, then the amount of money that you made last year is going to buy you 15% less than this year. So the quality of life goes down, or the neighborhood that you're able to afford also goes down. But for those who own real estate, they are spending more, which also affects the prices of goods and services. Now that tied into gas prices, that tied into supply chain difficulties, and tied into rare earth metals difficulties, in anticipation that COVID-19 was going to last longer than it was. It all ties in.
Speaking of COVID-19 and the pandemic as a whole, I want to dive now into stocks, because I think stocks are very important right now. The current temperament of it all is just, where is the money going? And realistically, like the big tech stocks, FANG, Apple, Facebook, Google, Netflix, money's moving away from there and into other buying opportunities with more potential upside. Because these stocks, they experienced a huge amount of investments during the pandemic because people didn't really, have the opportunity to go out. They had to be stuck at home, and these companies provided products that were suitable for people stuck at home. But now that people are out and spending money, the economy is recovering, money is going to other opportunities, because FANG ultimately they're too expensive. If you look at their market caps, they're in the trillions and multi-billion-dollar valuations, and that's just, you're not gonna get crazy returns from those investments. You're better off putting your money in a lower market cap asset, like, I don't know, some sort of new nascent energy stock that is, barely passing $1 billion in market cap. And that's actually what's happening. People are looking at energy stocks, also retail stocks. However, if you look at Facebook and Google, they've actually seen an increase in revenue because of their advertisements. People are now going to them to advertise their products because people are now buying. Everyone's buying, right? We are experiencing a huge influx in retail spending.
Amazon as well.
And it's great. It's awesome. It's great for the economy. It's cool. Granted, inflation is behind the wall looking and creeping up, but it's cool. And ultimately, you want to just look at companies that offer this type of service. That's not FANG, because investing in FANG now is
you want to look for companies that don't offer a service that is not
the
FANG?
type of service that's
about?
not FANG, with the type of evaluation that FANG companies
So
have.
FANG being Facebook, it's an acronym for Facebook, Amazon,
Apple.
Netflix.
Facebook,
and
Apple,
Google.
Amazon, Netflix, and Google. But they're really expensive right now. So it's not like you're investing in these companies you just found.
But are they going to
a
become
gem.
more expensive?
No, I mean their rate of increase at this point is either going to be really slow or stagnant, because they experienced a huge rate of increase during the pandemic. But now that we no longer have the same circumstances, right, they will either suffer in price or stay stagnant or barely increase in value at all unless they innovate in some weird exceptional way. I know Netflix is starting their own store on their app to sell merchandise related to their original shows and movies. And that's pretty cool. And that's pretty innovative. That might, drive the stock price up a little bit. So maybe, but it's still a really expensive.
So you're saying their earnings
stock.
are going to be affected relative to everything we've talked about, like inflation and things like that, because what they're expected to make in the future is going to actually be worth less, because the value of the dollar is going to be worth less, and at the same time.
Yeah, I mean, the point is, the majority of investors are not going to be looking at these companies to put most of their money in, because there is just going to be more upside potential in other companies now that the economy is recovering. These big tech stocks, included in FANG, had the advantage during the pandemic because they provided products and services that were suited for people that were stuck at home. That is no longer the case. And so money's now going into other assets.
Like
energy
estate?
Or
Energy, yeah.
Companies that offer products and services like hospitality, carnivals, cruise ships, airline companies.
Oh, this is a perfect chart for that, actually. Used cars, housing rent, transportation, catering.
Oh yeah, look at that. So what is the x-axis at the top?
The x-axis is percentages, it looks like.
So this is housing
So this is
costs are pushing up
70%.
inflation because they are a huge part of consumer price baskets. Top 3 contributors to the annual change in the consumer price index, May of 2021. Okay. So used cars, housing, rent, and transportation are the 3 main contributors to the annual change in the CPI, the consumer price index, in 2021. And then we have the Eurozone, which is, instead of used cars, renting, and transportation, it's catering, renting, and vehicles. Interesting. What do they mean by catering? Like hospitality?
I'd presume, yeah, it's like catering events, like 100% increase in price.
Wow. And this is Europe?
Wait, actually, if it's a 0.1, that's a 10% increase, actually.
So there you go. You're probably going to want to be looking at stocks that are involved with traveling and tourism, right? Carnival, airlines, Travelodge.
I say growth stocks. I still think growth stocks are the way to go, but that's my opinion. Like the FANG stocks. And buying real estate. It's just my opinion. And getting a Tesla because gas is getting really pricey. Or a hybrid.
Well, that's about it for me. Thank you guys for listening. Really appreciate every single one of you. And from everything you've gotten from this podcast, just want to remind you that we are not financial advisors and you will lose all your money.
Yeah, don't listen to us.
Don't listen to us at all.
You don't listen to a guy in a leather jacket. It's Miami. Come on.